Interest rates are starting to come down, but the economy is obviously not doing so great. And we're hearing that it's a buyer's market in the real estate world with less people interested in buying lately. So what's going on? And is Toronto real estate still a good investment? We're going to be diving into this in this video, but before we do, don't forget to like and subscribe for more tips on Toronto real estate investing. Right now, prices are still coming down in the current market because a lot of people are waiting for rates to come down even more. And when prices are stagnant like this, it's really not as exciting for a lot of investors, and most people like to hop on the bandwagon when they see prices rising fast. There's some fear in the economy and people are just not as eager to jump into the market. And you might be feeling the hesitation too. The truth is, Toronto's population is still growing, housing supply isn't keeping up, and the city is focusing on boosting density by encouraging more multi-unit properties in neighborhoods that were traditionally more single-family. And so recent policy changes have made it easier for investors to create multiple units in single-family homes, which means better cash flow and less risk because you end up spreading your rental income across multiple tenants as well. Now, another reason why prices are rising over time is because of people doing renovations. Renovating older homes increases their value, and this is actually a big reason why prices shot up during the pandemic. And if you upgrade a property's value for more than how much you actually put in, you're in a strong position to make money from that too. But remember, not all renovations are the same, so it's important to focus on cost-effective improvements and work with professionals who know what to put in and understand the market. Now, leverage is another big advantage in real estate. Borrowing money to buy a property can really boost your returns, but again, it is also risky if you're dealing with negative cash flow and negative returns. And so this is why positive cash flowing multiplexes is such a big thing for us. Let's break it down with an example to see how the numbers work. Say you buy a house in Toronto for $800,000, and this is very doable in today's market, and you invest $100,000 in renovations, but the total value afterwards ends up being $1 million. And so this gives you a $100,000 boost of equity right off the bat. Now, if you paid all of it in cash, you could rent out all 3 units for $6,600 a month, and after operating expenses, you net around $67,000 in net income a year after operating expenses. And that equates to around 7.5% in return in rental income, even before you consider appreciation. That's pretty good. But what if you take on a mortgage and borrow 80% of that purchase price? And in this case, you actually still get strong positive cash flow after paying for your mortgage payments. And annually, that translates to around $29,000 in annual cash flow. Plus, you get another $10,000 in principal paydown a year. Now, when you add that up, that total seems less than the original case with all cash. But remember, you're putting under $300,000 upfront compared to that $900,000 in the all cash scenario. And so this means that your return on investment from the rental income side actually jumps up, and that's before factoring in any appreciation. So as you can see, leverage can actually improve your returns quite drastically. Now, because your property is worth more after renovations, you can also refinance and pull out an extra $160,000 in cash. And so after everything is said and done, you might only have around $100,000 of your own money tied up in the property, and you continue to collect cash flow, equity gain, and appreciation. And this is what we mean by the numbers working really well in today's real estate market. Now, even though the market might feel uncertain, Toronto real estate is still a solid long-term investment. With prices and interest rates currently much lower, the numbers are actually pretty favorable, and the buying process is less stressful these days because there's less buyers. There's more room to negotiate these days, which makes it easier for you to plan around and do due diligence and figure out things like how much renovation costs and what renovations need to be done. And while waiting for prices to come up before you buy might seem safer, making objective, numbers-based decisions today can actually give you an advantage and position you ahead of the curve. And so if you want more details on multiplex deals in Toronto and want to find out what might be right for you, just reach out to our team. We are a Toronto-based real estate sales brokerage that specializes in multiplex properties in Toronto. So whether you're looking to buy a ready-to-rent-out property, convert an existing space, or even build your own multiplex, we've got the expertise to help you succeed. Here's what it's like to work with us. We'll get to know your goals, help you find great deals, and eventually help you buy the best one for you. Need renovations? We've got trusted contractors to help you out with this as you manage the project. Plus, we can handle renting out and managing your property too. Ready to get started? Just head over to this link here and let's chat.